Hey traders, Nick Shaheen here, recapping the week. And what a week it was. Ended on a bad note, and I'll tell you why. Although it ended on a good note, and I'll tell you why. It's kind of like one of those good news, bad news. Anyway, today is February 6th, 2015, and the scoreboard is red. Not very red, but it is red across the board. The Dow is down 0.34, same for the SPX. Double that for the Nasdaq, down 0.65%. About zero point 0.3 on the small caps as far as RUT, a little less on the IWM, but we knew the setup was there. Anyway, so the they're possibly a game changer today with regards to the macro, but it's still in development mode, so we are not going to harp on it too much. I'll mention it later. So recapping, yes, it was red day, but it was more disappointing for the bulls because here is the day, right? This is the day on the S&P, and let me zoom out to 5 minutes so you can really see what happened. The day started okay overnight. That's before the market opened. Right here we got the jobs number, and it was a doozy. Bam! Ran up 10-15 points and up higher, and then suddenly whoosh, we drifted lower. And right here in the chat room kind of called the fact that we have a head and shoulder ish pattern, and we may lose another 15 points. Indeed, we did almost exactly that. Same type of a pattern happened in the so this is the S&P. It was disappointing. You can like overlay this over that, and that's Apple, so you can see tit for tat. Apple was really disappointing, almost got to the all-time high, which is 120.5-ish. I can't remember when, recently. And at only the end of the day at minus almost 1%, and the low of the day was 118 and change. That's pretty low. Doesn't mean sell Apple and run. Apple has been in resistance territory, and now everybody loves it. So there's only hatred that can come up for that. All right, so if you've been following me, you've seen levels that I play and I share, and this is the Nasdaq. Today I'll zoom in, but it probably looks exactly like this. This is the NQ, the minis on the Nasdaq, and I have been watching several levels. Mainly is this one right here, the 4300. I've called it kryptonite because it's just made us fail, and I can zoom out. It extends out in time. More recently, two levels surfaced. One is this one right here, which is exactly where we touched today, and I'll show you when I zoom in on it. This is the one level, and the other one is the pre-kryptonite level, which is 4234-ish, and that's about where we ended up for the day. 4230, 4234. The lines are not scientific because I'm not a stickler about exactly touching, 1 penny off. The spirit stands. Okay, this is intraday, and these are the two lines. This is one, and this is one, and you can tell how we ended up between the two. So pretty scary day for the bulls when you see this swoosh down, and it's like, uh-oh, what's going on? So if I zoom out, say to an hour, you can see the kryptonite level. I guess I have to zoom out more. 180 days. This is about where it is. See, the line is not scientific, but it's an area of resistance, proven over and over again. All right. On the bullish side, now we've got the not the Nasdaq, the small caps. Again, they look like inverse cup and handle. So given more time, they would have been a lot uglier. Had it broken down from here, we'd have lost eyeballing it another 10 points easy on the small caps. So yes, poked to a high of 1213, and that's not an all-time high. It's been in the 1220s before at once. And yet it ends the day red, slightly red. So what to make of it? Well, what to do, what really happened actually, as a recap, what really happened is one thing in my opinion, the jobs number. I mentioned it was a doozy, and boy it was. Not the fact that we got good numbers for today, for this past month. It's because the revision on the numbers from November were staggering. If an analyst hands his or her boss say, that report I gave you, let me revise it and give you a new report, and it's off by as much as this jobs number was off for November, they'd be fired on the spot. They went from 253, what was reported early December, to 423, like 170,000 more jobs. Well, everybody bought it, right? But you know who also bought it? Now the realism that rates are going to have to go up because things are even rosier than we thought, meaning that Yellen and the Fed is running out of excuses to keep us low. That's the good news, bad news side. Good news, we got more jobs. Good news, we got more people. Yes, the unemployment rate ticked up, but it's probably because of more people looking for jobs. So participation rate ticked up. So that more people looking for a job. So unemployment rate it grows a little bit because the numerator grows anyway. So the fact that we have interest in looking for jobs is what I mean. That is bullish for an economy. More people wanting to work, more output and all of that. But the point is that the yen went so red on the announcement that I haven't seen that, and it was a big whoosh down. The bonds big whoosh down. Rates, the 10-year, it was up like 6.5, 7%. As a matter of fact, I think it closed up 6.7%. Almost regained the 2% level. So 1.953, I think, was the high of the day. Last thing I see is 1.938. So all this is good news for markets. It should be, but now that also translates in a realization that rates are going to have to go up sooner rather than later. Data dependent, right? Well, this is data. Data is telling you that unemployment is under control. Employment is growing fantastically well. I think the longest winning streak for a long, long time. And the average 3 months period is over 330,000 jobs every month for the last 3 months because of that 420. What if they revise the December and January next time they report up also? Right? So they're running out of excuses. So that's the good news, bad news. So that's the potentially game changer in the macro. So we may be topping off at least for now, okay? And you can see that reflected in the banks. The banks were fantastically happy today, even though the markets were red. And I can show you that. JP Morgan, Goldman, somewhere else that'd be probably more visible. Here's Wells Fargo, Bank of America, up almost 3%. Citigroup, you can see it. The banks are happy. And you see where the weakness lies, right? Visa, MasterCard, not too happy. So on the NASDAQ, you can see more red than anything. Google held up nicely today. I'm not sure why it was up over 1%. I may have missed a headline or two, but I really don't care. All right, so this is where the weakness lies. This is what happens. This is how I interpret it. What to do next? Monday should come in with, headline independent. Let's say nothing happens as far as headlines. We should come in with a mildly negative bias, right? Because of what happened today. More people are going to jump on the bandwagon. Oh, I told you I'm going to call the top right now. Yeah, we should start doing this. Yeah, we should start trimming our profits. You should start doing that, rotating out of this into that. So everybody wants to sound smart now. So they're going to have to jump ahead of it, and they kind of like become a self-fulfilling prophecy. So we may see a slight, negative bias for the next few days. So the rhetoric starts now. You can hear it now. The traders are already saying, bracing for impact, basically. That tells me that there was no conviction. You were buying yesterday. You were buying this morning, and now suddenly you change your mind. Okay, where's the conviction? Trade a macro like we do. All right, so a peek into next week tells me that the market's set up to play between 2,000 on the SPX. We're about 2050 right now, the pin, 2055. So between 2,000 and the recent highs. So I don't anticipate new highs without a new catalyst, but I also don't anticipate a breakdown. So it's a good way to do an iron condor or even do a credit put spread and be ready to defend it somehow. So I try to collect premium. That's for an active trader. A slower trader would want to, instead of doing that, they would want to try to snipe opportunities. So if something sold off, if you're a believer in GoPro and GoPro got hammered hard, you might want to give it another day before you try to pick it up. I'm not a fan of the company story. I'm a fan of their products. But I wasn't a fan up here, that's for sure. But if you think that this is a good place to catch that falling knife, maybe you want to go ahead and do it via a debit call spread. Small money, give yourself some time, so go out in time and do it. I think this would be a decision point. This is high volume, so I want to see what it does on Monday. It's interesting that today, with all the negative anti-exuberance, I should say, it didn't reach those two negative days right here. So that's something to note. right? Okay. So if this is doesn't get any worse, then it might be a good time to do a debit call spread. Another one that would be a nice catch to nice knife to catch, easy said. Priceline. Look at that. Today got hammered almost 3% on somebody else's news. You know who it is? Expedia. Expedia reports gets hammered over 10% down. Maybe it's an Expedia issue. Maybe it's not a Priceline issue. And even if it is a Priceline also issue because of high dollar effects and whatever, maybe today's news is now built into Priceline, and the reaction to the same news in Priceline may be a little milder. So you can pick up a debit call spread around 10.50 area for about $1, maybe 70 cents, and a chance to double or triple your money. Give yourself some time. It does report in the February options. So if you pick up the February option or 1 week past that, then your theta will be slowed down. And if you bought the spread, that's good for you because that's an early lottery ticket into the earning. Lottery ticket, small cost because the earnings is a complete coin flip. You don't know how it's going to go. Even if they tell you exactly the numbers ahead of time, you don't know how the markets are going to react. Okay, so snipe, maybe roll out of some profits. If you got a lot of profits in Apple, book some. Put some money somewhere else. And some people that just got hammered recently, maybe some long term Baidu, maybe some Tesla, maybe I want to roll out of Twitter. Maybe I've booked profits on Twitter. I've told you for weeks now to go long Twitter. So it's all, just pick and choose entry points. Okay, and as far as the macro is still the same for me. Macro is still the same. Some room for upside. The downside is not a complete disaster without new headlines. So you can trade the ranges. Stick with us and you'll get the ranges. Surprises. Last week I had the surprise, a breakdown in the TLT. Guess what? I called it on the money because the TLT just broke down this week. And look at that. Did I call it or did I call it? And it was here, and the reason I called it is because of this. This is a 10-year. Okay? That doesn't mean it's not going to turn around. I booked it, and I called it, and I booked the profits, and I move on. Other surprise is we may get some relief on the Ukraine front. Long shot via hope of some secret meeting that I read about early in the morning and then finally broke out onto Twitter that Merkel and Hollande, so France and Germany, are meeting behind closed doors with Putin in Russia over settling the Ukraine. So if there's some softening on the Ukraine front, that's positive for the markets. We may get a pop. That would be a relief pop. That's a shortable pop. It's not a game changer. All right. The other surprise is the I'm calling for this week or next couple of weeks. A spike in oil is going to be detrimental for the markets. What? Yes. Usually, markets and oil are trading in tandem. This is oil, by the way. We didn't talk about it. It closed up today, but why? It goes to 53 and change, and then in minutes goes to 50 and change, or 51. Yeah, mojoed market. So a spike in oil could push the actual measured inflation number, CPI and etc., up to where they really are. We have inflation, we just can't measure it yet, and then that puts even more pressure on Yellen to raise rates. Anyway, Nick Shaheen signing out. That's a little longer than I wanted to go, but I think it's important information.